Do you find yourself asking, how much money do I really need to buy a house in this current market? Have you ever wondered if the dream of homeownership is slipping away due to the home prices and mortgage rates in 2023? In this season of fluctuating real estate markets, whether it's leaning towards sellers or buyers, purchasing a home remains a wise decision for building a robust financial base. Now, let's discuss the essential expenses involved in turning homeownership into a reality. Hello, aspiring homeowners and seasoned investors. Step into the world of Las Vegas and Henderson with me. I am Long Fan, your host for Long's Real Estate Podcast, where we dive deep into all things real estate. Understanding the financial aspect of owning a home has always been a tricky, especially for first-time homebuyers. In 2023, it seems like things have gotten even more complicated with soaring home prices and high mortgage rates. Budgeting has become a bit of a puzzle. But don't worry, despite the challenges, buying a home remains a smart move, a pivotal step toward building a solid financial foundation for your future. In this episode, I'll guide you through the ins and outs of turning your dreams of owning a home into reality. We'll explore everything from down payments to closing costs, breaking down the essential financial aspect you should know in the ever-changing world of real estate. Breaking down the cost of buying a home. So, what is a down payment? The down payment is the amount of money you contribute to the home purchase upfront. By increasing the size of your down payment, you can essentially lower the amount of money you need to borrow, which in turns lower your monthly payments over the course of the loan. Lenders like to see larger down payments because they indicate a lower level of risk if you default on the loan. How much should you put down on a home? Most home buyers ask, how much should you put as a down on a home? Now, there's a common belief out there that you need to put down a hefty 20% of the purchase price to secure your dream home. To put that into perspective, if you were eyeing a $400,000 home, a 20% down payment will set you back a whopping $80,000. However, recent data from Realtor.com reviews a different reality. According to the first quarter of 2023, the average down payment on a primary resident was just 13%. That means you might not need to stash away as much cash as you thought to open the door to home ownerships. But wait, there's more good news. There are several low and no down payment mortgage options available that require even less money upfront. Some conventional mortgage programs demand just 3% down. However, keep in mind that any down payment below 20% will come with PMI, private mortgage insurance. Additionally, be aware that these loans might have income restrictions and typically require a higher credit score. Considering an FHA loan, you only need a 3.5% down payment, but a credit score of at least 580 is necessary for qualification. VA and USDA loans, on the other hand, don't demand any down payment. However, eligibility criteria do apply, so make sure you check all those boxes. Now, as enticing as these low down payment options may sound, it's crucial to keep your overall budget in mind. You don't want to drain every penny you have just to cover the down payment. Why? Because life is unpredictable and you need a financial safety net. Lenders take a holistic view of your financial situation and they'll want to see some cash reserve. These reserves act as a cushion, giving you peace of mind and ensuring you can cover your mortgage if life throws you a curveball. And speaking of safety nets, it's essential to have an emergency fund, whether it's an unexpected medical bill, a job loss, or any other worst case scenario. Having some financial padding can make all the differences. In conclusion, finding the right down payment for your home involves more than just a percentage of your purchase price. It's about understanding your financial landscape, considering loan options, and building a solid financial foundation for your future home. Let's talk about closing costs. You found the perfect home and you're ready to make the leap. But what about those closing costs? The down payment isn't the only upfront expense you need to consider. You can expect to pay 2% to 5% of your mortgage loan principal in closing costs. Closing costs varies widely based on where you're buying, however. Closing costs are the various fees and charges associated with finalizing your real estate transaction. These costs are separate from your down payment and cover a range of services and expenses needed to complete the home purchase. So, what exactly is included in these closing costs? Well, let's break it down. First and foremost, you'll encounter the fees related to your mortgage. This could be your origination fee, which is essentially the cost for the lender processing your loan. There might also be points, which are fees paid directly to the lender in exchange for a lower interest rate, but it doesn't stop there. You'll likely come across appraisal fees where a professional appraiser assesses the property's value. Home inspection fees may also be a part of the package, ensuring that there are no hidden surprises in your new home. Then there are title related fees. This encompasses title insurance, which protects both you and the lender against any issue with the property's title. And don't forget about escrow fees, covering the cost of the third party managing the transaction, holding funds, and ensuring a smooth process. If you're feeling a bit overwhelmed, don't worry. You're not alone. Closing costs can also include prepaid expenses such as property taxes and homeowner insurance. Essentially, you're paying a portion of these costs upfront to ensure there's enough in your escrow account to cover them when they come due. Now, here's an important point. Closing costs aren't set in stone. They can vary based on your location, the value of the home, and even the lender you choose. It's crucial to review your loan estimate carefully to understand the anticipated closing costs. In conclusion, closing costs are a crucial piece of the puzzle when it comes to buying a home. They might not be as prominent as the down payment, but they play a significant role in the overall cost of your home ownership journey. Next, we'll talk about prepaid costs. So, you navigated the down payment and closing costs, but there's one more financial frontier to conquer before you get the keys to your dream home. Prepaid costs, also known as prepaid expenses, are a significant part of the home buying process. But what exactly are prepaid costs? These are upfront payments for certain expenses associated with homeownership. Let's break down what's typically included. First up, we have prepaid property taxes. When you own a home, you're responsible for property taxes, and these are often paid annually. During the closing process, you may need to pay a portion of these taxes upfront to ensure there's enough in your escrow account to cover them when they become due. Next on the list is homeowner's insurance. Just like property tax, you'll likely need to prepay a portion of your annual homeowner's insurance premium at closing. This ensures that your insurance is active and provides coverage from day one of homeownership. But wait, there's more. If you're putting down less than 20% on your home, you may be required to pay private mortgage insurance, commonly known as PMI. This is an insurance policy that protects the lender in case you default on your loan. The upfront premium for PMI is another item that could fall under prepaid costs. Now, don't let these additional expenses catch you off guard. Your lender will provide you with a loan estimate, which breaks down the anticipated prepaid costs. Reviewing this document is crucial to understanding and preparing for these upfront expenses. Now, don't forget about moving costs. We now have moving costs. Moving costs can vary widely based on factors like the distance of your move, the volume of your belonging, and whether you're hiring professional movers. It's essential to factor these expenses into your overall budget to ensure a smooth transition to your new home. If you're going the DIY route and renting a truck, don't forget to account for rental fees, fuel costs, and any equipment like dollies or moving blankets. These seemingly small expenses can add up quickly, especially if you're making a long distance move. Now, let's talk about the option many people choose, hiring professional movers. While it might come with a higher price tag, the convenience and peace of mind can be well worth it. When budgeting for professional movers, consider factors like the distance of the move, the weight of your belongings, and any additional services that you may need. In addition to the physical move, there are often overlooked costs associated with setting up your new home. This includes utility connection fees, installation costs for services like internet and cable, and potential expenses for new furniture or home essentials. Remember, careful planning is key to avoiding any financial surprises during your move. Create a detailed budget that includes all potential moving related expenses. And don't forget to leave room for unexpected costs that may arise. Keep in mind that while local moves might be expensive, out of state or cross country moves are much, much costlier. Long distance moves also incur additional expenses along the way, such as cost for lodging, gas, or airfare as you move from point A to point B. Next, we'll talk about house payments. Securing a mortgage is a significant step in your home ownership journey, and your monthly house payment is a key aspect of managing that financial commitment. The big question is, how can you ensure you're getting the most affordable house payment? First and foremost, it all starts with your mortgage interest rate. A lower interest rate can significantly impact the affordability of your monthly payment. So shop around, compare rates from different lenders, and consider factors like your credit score, down payment, and the type of loan you choose. Another crucial factor is the loan term. While a shorter loan term may mean higher monthly payments, it often results in lower overall interest costs. On the flip side, a longer loan term may mean more manageable monthly payment, but you'll likely pay more in interest over the life of the loan. Find a balance that aligns with your financial goals. Now, let's talk about the loan type. Conventional loans typically require a higher down payment but may offer more flexibility in terms of interest rate. FHA loan, on the other hand, might require a lower down payment but comes with mortgage insurance premiums. Explore your options and choose the loan type that suits your financial situation. Consider making a larger down payment if you can. While it may seem counterintuitive to part with more cash up front, a higher down payment can lead to a lower loan amount, potentially reducing your monthly payment and long term interest costs. Don't forget about property taxes and homeowner insurance. These are often included in your monthly mortgage payment and held in an escrow account. Understanding these costs and ensuring they align with your budget is crucial for managing your overall house payment. Lastly, be mindful of your overall financial health. Maintaining a strong credit score, managing debt responsibly, and having a stable income can all contribute to securing a more affordable house payment. Owning a home comes with more than just the initial expenses. It's crucial to be prepared for the ongoing cost that comes with maintaining and enjoying the property. So, what should you be considering on a regular basis? Aside from mortgage we talked earlier, property taxes are another ongoing cost that homeowners must be mindful of. Property taxes rate vary by location, so understanding the tax implication in your area is essential for proper budgeting. Now, let's not forget homeowners insurance. This insurance is your financial safety net protecting you in case of damage to your property. Make sure to review your policy regularly to ensure it provides adequate coverage for your home's current value. And speaking of insurance, don't overlook potential additional costs like flood insurance or earthquake insurance, depending on your location. It's all about preparing for the unexpected and ensuring your financial safety net is comprehensive. Home maintenance is another ongoing consideration. From routine tasks like lawn care to more significant expenses like roof repairs, setting aside funds for maintenance is crucial. It's not a matter of if something will need fixing, it's a matter of when it will need fixing. Utilities, of course, are a recurring cost. Water, electricity, gas, and other essential services are part of the ongoing financial commitment of home ownership. Being mindful of your consumption can help keep these costs in check. And let's not forget about homeowners association fees. If you're a part of an HOA, these fees contribute to the maintenance and amenities of the community. So be sure to include them in your ongoing budget. Preparing to buy a home. Once you've answered the big question of how much money you need to buy a house, it's time to answer another one: how to get ready to make the actual purchase. But that's another topic for another time. What I want you to do right now is absorb first everything we talked about. We'll dive into the next step in buying a house in our next conversation. So, if you found this episode helpful and want to continue learning and staying updated on all things real estate, we invite you to follow us on your favorite podcast platform. By subscribing to our show, you'll never miss an episode packed with valuable insights, expert interviews, and practical tips to guide you through your real estate journey. Also, I love hearing from our listeners. If you have any questions, comments, topic suggestions, or real estate stories to share, please reach out to us. You can follow me on my social media pages to search for Longs Real Estate, local realtor in Las Vegas and Henderson, Nevada. I will also save the links in the description of this video. Until then, remember, in Las Vegas and Henderson, the odds are always in your favor when you have the right real estate agent by your side. Thank you for joining us today, and see you next week.